we start right away. So I would like to start with the general question. It's clear that the capital attraction issue is one of the most painful ones, and as if I understand it properly, is seen what's going on in the market and other typical trends. So that's where I would like to start with an overview, so that each of you would say a couple of words, what's going on in the market, how this capital attraction works, so what companies do. So I would like to start with Artem Iniutin, co-founder, investment manager of TMT Investments. So what do you think? What's going on? Good afternoon, colleagues. Dmitry, thank you very much for your question. If we start talking about Russia and we talk about attracting the funds, and it's quite a complicated issue, and we are quite skeptical about it, because despite the fact that in Russia there are many family offices, and they say that they're ready to invest their money in ventures, and but when you become more concrete, and it turns out that everybody who is responsible for family office, they'll all of a sudden become the coolest ones and the smartest ones, and doesn't matter if they never did with IT technologies, but for some reason they think that they will make it most efficient. They will only invest in direct projects, but mathematically it's clear that it's better if you have the whole basket of projects, and to see that the basket would bring you profit, bring you. But for family offices, this math is not a directive, so they think that they are the only ones who know how to do it. Secondly, if we're talking about entrepreneurs, people who have capital, unfortunately, I have to say that the number of these people is decreasing year after year. I'm talking about the last 3 years, and this money, since in Russia it's very difficult to earn so-called new money, many people, what they do, they spend so-called old money. That's why, again, we're quite skeptical about so-called rich individuals. And plus that, the unstable economic situation for people, it's difficult to invest their money to projects that are over 3 years. But you know, the classical fund is 7+2 or 9 or 10 years, and for that IT project, venture project grows, we know that we need 7-8 years. A unicorn, it's 7-8 years minimum. So that's why for people it's they're scared of losing their money over 8-10 years period. But immediately you see what you did. You placed a conflict here. So that's why we ask Mikhail Lobanov, managing partner of Target Ventures. So I will be more optimistic. If we compare me with Artem, I think that in Russia there is a lot of money, and many people want to invest. The problem of the Russian market is that many Russian investors, they don't want to invest in Russia. And that's why to attract the money to invest in Russia, it's not that easy. On the other hand, there is a great demand for investments in the West, in the US, in Europe, in Israel, and in the East, in India and China, but we're more focused on the United States and Europe. But oftentimes the investors are not ready to commit for a long investment like 7-10 years. However, there are some other opportunities to raise capital. For example, we deployed quite a great work to attract investors to connected deals with co-investments. For the last year, for us it was quite a successful area. We raised a lot of money that could be measured by tens of millions of dollars, and people can look at companies on later stages, those who are closer to operational profit, and in this case people like these deals. And when we work with such investors, we try to develop a co-investment program when they invest together with us directly to these deals. We manage the assets, and we they make a commitment that they invest in 3, 4, 5 companies, as Artem said quite precisely, that it's very difficult to actually guess right with just with one deal. That's why you have to have a portfolio or basket. So in Russia it's possible, but you have to have a more creative approach and look at quite specific companies and industries. So they're co-investors. Yes, they're co-investors. So if we are two funds and we go to one deal, so we are co-investors because each of us makes its own decision. So we may stay or may not. But in the case when people who don't really know what venture market is about, so we sign a power of attorney with them. We say that we're going to be managing this investment. We tell them where to enter, where to exit. We make a decision how to vote with shares and so on and so forth. That's why it's a LP, but in a very particular deal. So I would say it's a free definition of LP, but you have the second fund, right? It's not. Yes, it's true. So what I'm saying, so Artem's statements kind of, for you, as I understand, it's quite a bloody process. Yes, it's a bloody process. Do you disclose information if LP is of the Russian origin or global? Not only Russian origin. We start with Russian money, but now we diversified quite significantly. Last year was quite a turning year. For our big investors, for a significant part of the portfolio, it was Northern Trust, American big fund. They bought quite a big share of our portfolio, and this bank trust, $800 billion management capital. So this is our big investor as well. We also have investors from Europe, Israel, and some other countries. So that's why it's not only Russian investors. And if we have more time, I would like to ask you about the mechanics of raising this money. So if it's not a secret, how much time did it take you to work with this investor? Well, it took us 9 months. We had a structured process. Maybe it's really that long, but yeah, maybe not that long, but it depends on what you compare it with. It depends. It's quite a long time, given that's how much it takes to give birth. So a number of institutional investors, we talked to them. There were some other investors that wanted to buy this, but Northern Trust gave us best conditions. And colleagues, if you want to add something on the way, so don't wait till I ask you. So actually welcome if you cut in. So Vadim, so you probably have a completely different evaluation of the market with completely different criteria. You were going circles around the market, and at least we know that you looked at the market differently. And why did you decide to enter the market? And are you ready to launch other funds, and why you have this classic conventional corporate fund? Let me say a couple of words about the fund. The fund that I'm representing here is the co-fund with the Rosnano, $100 million. We invest in venture projects as robotics, communication, automatic equipment, software, hardware. We work less with internet, but these are the areas that we work in. We as a system, we made an institutional decision to realize our venture projects through venture structures. We have a system, venture capital. It's a venture fund that invests more in internet projects. We as fund with Rosnano, we look at different areas, the areas that I just talked about. And the funds, this is the most optimal structure for venture investments. Our participants, us, we make a commitment fund. We understand that the life of the fund is quite long, that we invest particular capital and then we use this capital for investments. Following up on what my colleagues said, first of all, I would like to say that as a rule, Western capital, Russian capital, they don't work together well in the same fund because of many reasons. Based on my experience, I say Western institutional capital, they like if the structure where they enter, they want to see the same institutional, similar institutional investors. They maybe Western, maybe Eastern, but sort of like-minded investors. Those that understand the same categories. Russian investors, on the other hand, because of the reasons that my colleague mentioned, they incline to invest in certain projects, later stage projects. They're not so familiar with the ideas of kind of freezing their capital for a long time. And if they're not comfortable enough with the team that's going to be working with their capital. So if you think about attracting Russian capital to certain structural funds, you have to think twice, because foreign investors and Russian investors, it's difficult for them kind of live together. So as I said, Russians are more specific about where they invest. Have you considered any other instruments besides corporate? There is there is Asian fund, and there is a conventional fund that you venture. Asian fund, this is a different area. It's been established. It's probably focused more on Asian markets, India, China, and other countries of that market, of Eastern and Southeast Asia, and this is more to the farther future, so to speak. So, but those funds, conventional funds that you already have, did you achieve anything? So the system that we work with, it's kind of a DNA of we're active investor. We play quite a significant role in the investments we have. Funds are funds. When the money is invested in other funds and other management teams that manage those funds, this is not something that we're trying to create within our corporation. Our focus is on building portfolio managers, portfolios that we have, and we accumulate competencies within these corporate managers to give money to Sequoia or someone else. It's not exactly our subject. We know this, but we wanted you to articulate that. Vasily, so we'd like to talk about institutions. Skolkovo has quite serious plans. So it would be interesting to see how you look at the market, from what position, so what you're going to launch in what format. Did you have any dilemmas at this stage of choosing tools for this work? And so it would be interesting to learn your plans. So thank you very much. Yes, Skolkovo so far is a non-profit organization. We saw that there is a need to create new instruments to support venture projects. According to statistics, it's about 30-35% of venture deals are done in Russia with the companies that connected to Skolkovo.
And if you look close at those sectors which are supported by Skolkovo, we do not support classical commerce, we don't suppose any retail or projects. Then the share across the sectors will be much higher. Probably the record-setting share is in the pharmaceuticals, in pharma, and new materials, etc. I will not be surprised if in these sectors the share of investment accounted for by Skolkovo residents will significantly surpass 50%. And the amount of venture deals with professional investors in the market is pretty small if you compare it to the size of Russia's economy. Therefore, we decided to have a look in this direction as an institution, and as opposed from the colleague who just took the floor, we have an opposite view of the situation. We're an institution with no track record of a commercial organization. We decided that we must provide a platform for raising funds. For development of technology companies. As a first step, we thank RVC, who supported us in this venture. We agreed on creation of 3 venture funds. Well, their names are public: IT, Industrial, and Biomed. And RVC requirement and our wish was participation of private limited partners in these funds. To implement this feature, we as a state-owned development institution to implement the function of generation, of origination, fundraising, etc., to implement it with OGP teams. This information is less public now. For industrial fund, we work with 2DF team, Ilya Golovoi is in IT, with Gleb Davidyuk, and for Biomed, we work with Dmitry Sharov. He is known rather as OCT, not as their primary capital. But it's also a small sector in Russia. We assume operations, compliance, organization of interaction with RVC, and we give an opportunity to those teams and people from the market who have a certain reputation to implement a joint project for mutual benefit. All corporate decisions have been taken both by RVC and Skolkovo, and I expect that within a month we'll be able to complete all organizational efforts. We've been in this process for about 9 months. And where is the role of Skolkovo? We see a certain category of potential institutional limited partners who were not yet involved in the venture market. This is a certain category of potential foreign investors with whom we operate as part of our international activities. We see that Chinese investors started to move from term sheets and memos to actual deals. In the last several months, we completed 2 deals with Chinese people, one with complete cash out. Seemingly, we can work with these investors, but so far it is an example of an area where, in partnership with private general partners, the role of Skolkovo as fundraising entity will be manifested. The second part is for institutional investors. State corporations, here we see Rosnano operating here, but in principle, any diversity of the market will benefit the market. And from this perspective, Rosnano's mandate is closer to private equity due to now genetic origin. We're more focused on round A. I hope we'll organically complement each other with our colleagues. Our perception is that it will be a good result if in different forms of commitment. At the start, people said that the linear form of inviting classical LPs inside of the fund raises a lot of questions in the market. We're going to use different structures, and broadly speaking, within the next 5 years, we expect to raise something like 30 billion rubles. I would like to ask a question for clarification. Creation of funds of the structures is driven by the need to finance Skolkovo projects primarily. Is it so or not? And what will happen with projects which are not pursued by Skolkovo residents and which are not included into the perimeter of Skolkovo startups? We are talking about 2 multitudes. Given the role of RVC in the current ecosystem, as an institution, on which the national initiative, innovation initiative is based. We do not limit ourselves to Skolkovo residents. We with our colleagues implement a pretty flexible legal structure. We can structure deals in any jurisdiction. For us, we look at the technology stripe. It should be complying with Skolkovo goals, and Russian uncle, that's 50% of investment or sales should occur in the Russian Federation. That is, such investment should directly contribute to development of Russia's economy. The Skolkovo resident status will analyze all resident companies, but I'm talking about opportunities, not commitments. It's the opportunity to generate pipeline faster. We've been investing for 6 years for pre-screening of projects. Not all of the projects are attractive, or not all of them fit our mandate. Return on capital is a self-speaking thing, but it's an asset that we're going to use. I do not yet understand the role of involved private investors. They will be acting as general partners or no. Effectively, we merge teams. It's sort of project activity for them. They are on the investment committee and they prepare deals for the investment committee. We provide infrastructure. That's close to what Mikhail said. Limited partners for some specific deals. No, there are co-managers across the fund. We have 3 separate funds. IT, industry, and biomed are attractive for different LPs. We're not prepared to put it all in one pot, but inside of these categories. But have you seen any similar structures in other countries? Some government institution in the structure, or even 2 entities with private investors. It's interesting. It's not maybe not a direct analogy, but there is a family of funds which are structured as a single fund, Gründe Fund, which was established in Moscow. The bulk of money is government money, and they have a variety of industrial LPs, but it's broken down in several sections. And in each of these sections, LPs from industrial companies have a role in evaluation of a company during preparation of a deal, and they sit on the investment committee. But in their situation in Germany, major players, major companies are involved in that. Daimler, Bosch, etc. Although in terms of materiality they are not that important. But for them it's an access to the pipeline of projects. It's a different model, but it is there. Maxim, could you comment on that? Thank you. Good afternoon, colleagues. Probably I will agree with all previous speakers that really it's now more difficult to deal with LPs. LPs are becoming more selective. They want to look at interesting strategies. The key issue for many people is the liquidity issue. Yes, really plenty of people are not prepared to lock their money for 7 or even more years. We have to use a creative approach. The latest fund that we created recently, the Vintech fund, we use several structures. A classic one of them, GPLP. For those who is not prepared in the investment policies, for those people who is prepared to wait, this is a classical LP. And second part, that's for people who want to have some additional liquidity after a passage of time. This is a separate entity which allows them to exit after some time. Well, it's a sort of exchange platform which invests in a certain platform, and upon a certain lockup period it allows the investor to exit into the external market. It's difficult to deal with limited partners. We should have to imagine some interesting structures for them. However, the second part, which seemed very material for us, it's strategy, our strategy. People are not willing to look at simple stories when you invest something, then you sit idle for 3 or 4 years waiting for some return. Many people want to see some dynamic stories. They want to see how the team of a fund is involved in managing the company. They want to know what sort of additional value this team creates, which confirms the thesis that in Russian projects, people who want to invest are still very few, but we found a format where we look at projects which are available in the global markets, Europe, UK, to a less extent the States, to a bigger extent Israel. We look at early stage A, B, the companies which are already in the market and produce certain revenue. We look at such companies in the area of IT and fintech and come to an agreement with them that using our investment they plan to tap the Russian market. In fact, we defend the investment for LPs, and at the same time we help our industry to develop. We're doing 3 deals of this type, but we look at the Russian financial technology sector. We closed an interesting deal late in last year. It was a mixed strategy. However, there is an interesting thing on the sideline in terms of structuring. Unfortunately, the Russian laws do not do much in favor of venture investment because there are so few instruments. Well, there are not many shares entitling to different rights. There is a limited opportunity to invest in privileged stock, preferred stock, that's with a cap of 25% still until now. We try to work in the working groups where we sit with the government and with the regulator. It's our agenda. We think that it's important. If we want to develop the internal LP market, in addition to brilliant investment ideas and the very good teams, we need to encourage development of internal institutions with the help of a legal framework which is effective. It is not always convenient to use the international laws where there is a deal of co-investment with RVC. We have to exit the Russian jurisdiction. We want to have more instruments for this purpose. In a nutshell, that's all. I just wanted to repeat, we should think of how we can flexibly cooperate with the limited partners in terms of liquidity. We should demonstrate interesting strategy, including strategies focused on Russia. Not necessarily Russian companies, but there are plenty of Russian companies which are interested in transfer of technologies here. And I would mention crowd investing and crowdfunding. It's a popular subject now. In principle, we can find LPs even in that area. Yes, the amounts are limited, but there are quite a few examples in Israel, for example, where Altair Fund, and we like their strategy. They propose a variety of deals through their crowdfunding platform for small-sized and medium-sized investors. They close a deal and invite everyone to join in. It's quasi-LP situation. It's a club platform effect.
So all of you described a lot of issues that we have, but what I'm interested in, and we actually can't avoid this subject, the previous session was about pension fund money. So is it interesting for private capitalists? And maybe this is a question to Artem and Mikhail mostly. So what, in your view, could help to involve this money into the private part of the market. So as far as I know, you did something in that regard, because we can run ahead of the Forbes list, and there is a few lucky ones that manage somehow to gain something from it. So are you interested in the public capital in some form, something that Vasily mentioned, or some other options? Artem, do you see any prospects in it? Well, thank you for the question. We, before answering your question about the public finance, we're looking at LP, looking at the Chinese market, European market, and the US, and now we're in the process of working with them. If we're talking about the public money, here's the question. In the world, the money that pension funds give, this is huge money, trillions of dollars. And if we speak about the United States pension funds, then of course there are many restrictions there when they're looking at a company to enter the company, because first of all they look what the region is where the fund functions. Then they look at how successful the team was, the background of the team. I'm just telling you how they do it in the US, and then I'll tell you what they do in Russia. Oftentimes in the US they look at the option when the money can be given to the third fund if the two previous ones were successful, and they look at the profitability of the previous two funds. Quite a rare case when they give money to the first fund. There are exceptions, but naturally they looked at the territory, they look at the size of the fund, and it's better if the fund is from $250 million. $100 million, this is too small of amount for them. Then, of course, they do due diligence of the portfolio. They see how the whole thing works. They look at the annual profit. They see what IRR was in the previous funds, and if everything is okay, they look at the team, all the competencies of the team. If everything is okay, and of course the money is coming, and it's big money. But all that ties to this, because the pension fund doesn't give as big of the profit to their investors. They have certain interest on public bonds, on corporate bonds, so they don't want to have a zero profitability. So that's why in their investment policy, about 2-3% on high-risk assets, and they also look at ventures. They understand that 25% of world funds, fortunately we are in this number. This is the funds that IRR is up from 15% and up. So they take the whole background of the fund, they look at the revenue over the years, and this is how you get IRR. They look at the annual profitability, and then they make their decision. If we talk about Russia, we understand that this large money that is just sitting there and doesn't work. On the one hand, the government wants to protect its citizens, and it's right that they're so strictly regulated. But on the other hand, people need to make money. We know that RVC, as fund of funds, at some point was distributing the money among funds that were investing in high technology. And it turned out that the issue was when all funds, there were about 20 funds. And I don't really know all their names, and they're probably not that famous, but when the calculation chamber came, and when they were coming and they're asking what is in this project or in that project, and we understand that venture, in fact, is either great success or closing the project or something stable. And of course, everybody is running after great success, and those American funds, they also look at the percentage of successful projects in your portfolio. And usually they say in Silicon Valley that in the seed stage, the lower the stage, the lower percentage of closing. It's very important to know how many successful projects they have in the fund. And the commission, when it comes to the funds that use state money, public money, they don't look at the average of the portfolio. Maybe 5 out of 6 they're quite successful, but they look at the project that doesn't really feel well, and for some reason it is closed or it's about to close, and the fund needs to decide for itself, is it ready to work with this pain in the neck that the state audit chamber is working with, but it's going to be like tens of millions of dollars of this pain in the neck. You know, there is huge problem with this state public money. So if the government goes along the path to allow the pension funds to have proper profitability and to invest in ventures, then they have to work more on this IT technology, so that wouldn't be the same attitude as to petrol business, because it's completely different business. IT is different. So, and here we need to learn. And I would like to add here, so about the state-owned fund, talking about Israel, how it should be co-investment with commercial or not. This sovereign Israeli fund, there are 2 strategies that they use. One, when they directly invest in an Israeli project and they say, I'm going to give 40% of money to Nokia, but you have to find 60% of it in the market from commercial funds. So co-investors should be regular VCs, teams of which they're going to put their reputation at risk, their human capitalization. They're not going to enter a bad project. That's why for the public fund, it's quite a secured strategy to give just 40%. That's why this Israeli fund, they have quite high profitability. There are 2-digit figures, and maybe Free and Skolkovo, when all of a sudden the project decided to change its jurisdiction and go to other markets. So if it's purely Israeli project, what Israelis do is all of a sudden it wants to become an American project. They say, pay us 3x and go to any jurisdiction. So the fund fully compensated all finances they invested in the project. In other words, if you're saying, so potentially it would be interesting, but it's better if the legal risks connected to private investors should be more properly worked on, because RVC, Skolkovo, their role is very important because they're big governmental structures, and in many ways they influence the Russian venture market. It's even difficult to fully evaluate their significance in the market. That's why government's role is to properly adjust the process to make the market properly work. Mikhail, do you have anything to add? Yes, everything was said correctly. So the regulating this story, European Investment Fund is a good example. It's LP and probably in 2/3 of all the European funds. The volumes that they play with is quite big, and 100 million is quite high. There's a lot of bureaucratic work to deal with. It usually takes to close LP, to consider LP, it takes like 10, 12 months, but nevertheless it works, and this work is quite reasonable. It's not just automatic bureaucratic work. So they see so that the money would be invested in Europe, not other places, and so on and so forth. And they achieve quite good results. But again, so these restrictions should be reasonable, and their restriction is that everything should be structured in European jurisdiction, because European jurisdiction, there you can find a big number of people that can structure properly. If we say that everything should be structured in Russia, but I don't know that that in Russia the fund could be structured properly. Talking about free company or other companies, I think that everything should be structured in Russia. We have one co-investment with free, and I wouldn't say that it actually helps to attract other investors, and from abroad particularly. That's it.
Could you comment, Vasily? Maybe it's not your field of knowledge, but you look into that as well. You mean about the jurisdiction? Yes. Just, I will not speak for the entire market, but what is our opinion? To attract Russian investors, those investments partnership, which is being looked into now, provided documents are executed properly, is quite good. I think it's a fair tool. The key risks so far are that there are no any precedents of disputes, and how the court ruling will be implemented. The law contains just general provisions, but the details of reciprocal claims and division of the assets is not yet laid down on paper. It's a major risk, but we are optimistic that once such practice is accumulated, this tool will emerge as a working one and a convenient one. But I hope that we will not be the subject of this testing this practice. As for the jurisdiction for structuring a deal itself, yes, it's a problem. Frankly speaking, for ourselves, we decided that we are prepared to structure a deal in any jurisdiction. We understand that people from RVC support us, although they had a discussion. But clearly, if you are structured in Russia and the rest are structured at corporate level elsewhere, you act to the prejudice of your rights as an investor, and not only for yourself, it's a problem, but for other people. It is not predictable what may be your next step. It is a problem, but it's of general corporate nature. It is not specific to the venture industry. It is specific to Russia's investment climate in general. Well, it's linked to our court system, etc. Why I'm insisting on this issue of, and I think that the best opportunities are linked to potential government capital. High net worth individuals are somehow behind us. We talked about corporations. If corporations want to play this game, they poorly communicate with private investors in terms of raising funds. And it will remain so for some time. Then what is the outlook from the perspective of raising capital into the classical funds? You can compare different things. Artem mentioned that partially. I will start with Mikhail. Where do you see the main sources of external capital? We see it not only in Russia. That's why I ask. I believe that there is plenty of capital in Europe, and if people see that you have a nice European portfolio, you can raise funds. You can start with a family office, and then you should tap institutional investors. There is a good potential for inviting foreign capital into Russia. But the problem is that there is a shortage of supply of high quality investment proposals. It's objective reality in Russia. There are very few sound venture funds. There are very few sound Russian funds with GPs. There are not 100, there are less than 50 certainly. Competition for fundraising, for capital raising, is not very high. However, the supply of money is quite significant. And you can see it across the entire scope of the asset management situation. Alpha Capital is selling the same amounts now as they did several years ago. Although there are plenty of new investment tools across the road which bring nice returns, including litigation finance. We're lagging behind in Russia. The competition is much lower, but the money is here. People are going to invest because they see that oil prices are declining, real estate is not as expensive as it used to be, and people should diversify. What we will show to your new potential institutional investor, we will show him a portfolio of 8 companies at a later stage, 2 of which are in the States and 6 in Europe, which have been developing quite nicely, and there was quite a competition to become an investor of this fund. And along with that, these investors made a commitment for the new fund. It's very difficult to deal with an institutional investor. You come to him, you describe your biography, you give your credentials, etc. And then you say, give me some money. It doesn't work properly. It's easier to say that I have 8 companies, and this is the performance of this 8 companies. Want to be involved, and the response will be better in this case, because people start to look not only at yourself, but also at the businesses where you invested. You can start relations with each investor, then you can invite them into the classical structure when you decide where you invest. Other top 5 life hack for raising investment. You have some experience. The main story is to demonstrate your track record. It's the only thing in which an investor is interested. VC, we think that we're people changing the world, but effectively we're asset managers. You can invest in bonds and equities or in non-public companies. The only objective that we have is to return the investment to the investor with some interest on top of that. Track record, how much fund you raised, how much money exited that, and how fast you did that. The origin of money, is it of important, or is whether it's Russian or foreign capital? The origin of money is a factor. We have 5 partners, 2 Russians and 3 are foreigners, 60% are foreigners. It helps to raise funds from institutional American, European investors, but with a good track record, a purely Russian team can raise money. With a good track record, people will forget about where you come from, even if you come from Nigeria. All LPs, all foreign LPs look at 4 things. They look at your team, at your pipeline, track record, and your strategy. Track record is what you have already achieved, how much money you earned, where you invested, etc. Pipeline is where they plan to invest, and their strategies, to what extent the team did before that, they plan to continue doing. If all answers to these 4 questions are compelling, then you will see investors lining up for your project or for your fund. But there are plenty of questions about track record. Unfortunately, there are very few managing companies in Russia who can tell a successful story of their operations in the recent 5 or 10 years. Even in terms of chronology, we didn't have so much time. Maybe second funds, for third funds, I don't remember anyone having a third fund. I would like to ask Vadim, how often investors pitch you? Look, what is primary investment opportunity or capital? Investment opportunity is a primary thing, capital is secondary. There is not much capital in Russia, but investment opportunities are even more scarce. If people have an interesting breakthrough investment opportunity which clearly describes how can earn money, and we have a team which can give a compelling story to investors, to find capital for this investment opportunity, investment project will not be difficult even in Russia. It's another thing that these opportunities may not be so interesting, or people are not able to give a convincing story. Your question. Do funds often come to you to pitch you as the limited partner? We as a corporate entity, we act as a flag carrier of our funds. There are co-investors which work with us because they have a long-term story of relations with us. That's primarily, and to a less extent, because the team which does investment has a decent track record. Interestingly, some people say that there is plenty of capital, some people say that there is very little capital. Maxim, you want to add something? No, I'm not talking about capital. There is plenty of capital. I will give another life hack in terms of dealing with LPs. Many LPs are eager to invest in interesting stories, which are interesting stories where the global funds appear. If you demonstrate in your pipeline deals where global funds enter at a later stage, you act as an additional provider to the road of major investment. It's true for Investment UK, where we raise funds for the fund, where we demonstrate our deals where big funds enter, and investors say that we believe in you and in these big guys. It's an additional guarantee for us that the global funds had a look at our projects and supplemented our expertise with their own expertise. We're running out of time. Maybe there are questions from the floor. Are there any? Yes, there is a question from the floor. Good afternoon. Big Russian investment group. I know some of the participants of this forum. Thank you for the very interesting discussion. My question relates to the problems that you've mentioned. Raising investment from LP. Our company works on a platform which will allow to raise small amounts from 500 upwards of 500 rubles in a project. And my question is to all speakers. Would it be interesting for you to open your projects to investment of such scale when tens of thousands of people will invest in your project 1,000 rubles or 500 rubles? I will try to answer your question from the Skolkovo perspective. We think about that if we look at that from a different angle. It's interesting for us. The biggest problem of crowdfunding platforms is that there is no manager in this model. In the venture market, we enter at a stage where the classical model, you invested money and you're waiting for your happiness, it ends up with the write-off. And without GP or partnering with a fund, has no prospect. However, if you agree with several funds having a track record that you, for them, will be a source of money for joining in their deals, and you'll be able to aggregate an amount which is material for this fund, that is several hundred thousands of dollars, then you will definitely be interesting. We are planning to do such a legal tool in the context of Skolkovo Ventures or Skolkovo ecosystem in general.
за которым все идут.
But the key is the leader that everybody follows, because of course you can raise the money. Because examples of such platforms are many, but so far nobody succeeded much in this area. So it's not that simple. I think another question is very important. It is the matter of regulating it. So we're going to bring 10,000 people in one company, and what this company will be. It's going to be quasi-public. When you bring thousands of shareholders, and then you have to fill out Form S1. So this pending an act that not so many companies are ready for. So I think it's quite a significant issue. Yes, in fact, in Russia, you really hit the point. This is in the law. There is a big hole in terms of crowd investing, crowdfunding. In fact, answering your question, we like this subject, but at least the venture division of Da Vinci, we have investment in a Russian company, crowd investing company, and through this platform we will be trying to raise monies through the platform to certain deals. So people should go with the average ticket lower and lower to let people participate. In terms of our fund, this structure wouldn't quite work, and I'm thinking in terms of for which funds it would work. What's important is to stay in touch with these small investors, and what type of communication or dialogue you need to have with this hundreds and hundreds of investors. So they probably need some reports, or say law enforcement agencies will come and ask where did you invest the money and where is the dividends and all that. So the configuration of the relationship is changed. So that's why how much resources would you need for this? You can ask another question if you have, please. The new form, the public bonds for the population. Would it be possible to attract this money? So the state proposes 13% of dividends for these ones. So who's ready? So I'll answer this question. So with 3%. Bonds in the Soviet time, this and that. So they want to revive those, and quite a big percentage of the population wants to put this money in the bonds. So why do you think they will be investing in these small partnerships? So it's not the first public initiative, and as far as I know, there are many of them to create such projects as crowd investing, crowdfunding. Involving the population. When you offer to invest in public projects, this is protected investment. If people want to invest in ventures, they expect a bigger return. So that's why I don't really see a big competition here. So in fact, many venture projects for themselves, the story with bonds that based on what we have is possible. First of all, that's going to be a completely different class of investors, those who will be investing in public bonds. But not every venture project would be able to pull off a debt. So because you have to service the debt, you have to pay interest on the debt. So that's why investment in equity is, I think there are two different categories of investments. So we took 5 extra minutes, and I think you can discuss other issues in the lobby. So thank you very much.